Welcome back. Gokuldas Export is the next management on our show. The company's reported a strong set of numbers. Top line has jumped by 78%, but that's aided by acquisition. Organic revenue growth is closer to 19%, but there has been some margin contraction. We have with us Sivaram Krishnan Ganapathy, Vice Chairman and Managing Director of the company, now joining in. Thank you very much for joining in. So for the first 9 months of the year, your like-to-like organic revenue growth has been 19%, and your top line is closer to 2850, 2900 crore rupees. Can you sustain this organic revenue run rate of 18, 19, 20%? And can you hit a top line of 4,000 crore rupees for the full year?
So obviously we are quite keen to deliver growth, and we are seeing a fair amount of traction from the customers. So demand is not a constraint for us, and sustaining this kind of an organic growth is quite possible, and we are working towards that. So very much possible. And I think the prognosis for the next 2 to 3 years will also be very strong, given that the geopolitics is also working in our favor. So more business will come out of, say, Bangladesh, China, Vietnam, and all of these regions, which are either becoming expensive or politically becoming unfavorable. So all those benefits are coming towards us. So we are seeing fair amount of traction. So demand is not an issue. We're setting up a lot of capacity. So this kind of growth is possible.
Mr. Ganapathy, give us a sense and as well as an outlook as far as margins are concerned. Sequentially, there has been improvement year on year, a bit of a decline. Is there resumption as far as price realization is concerned? Q4 and FY26, where will margins trend?
So the margins are impacted by some of the acquired entities which are still performing at a lower margin than ours, even though in the acquired entities, the margins are improving quite a bit. So dramatically, we are seeing some improvements. As far as the main Gokuldas is concerned, some of the margins are also weighed down by the rapid expansion that we are doing. So several new factories have employees who are coming in and they have not yet become revenue generating. So we are carrying extra cost for growth. And I think as that becomes mainstreamed, as in they start contributing to revenue, the EBITDA margins will improve. Further, I'm seeing that, as we get into the next year, when demand picks up further, our ability to, push back on pricing, our ability to, get scale economies also will help us improve our margins. We are targeting a 1% improvement, on margins as we go forward.
You said the outlook is strong for the next 2 to 3 years. You laid out an aspiration to hit $1 billion in terms of a top line. Do you think you can get there in 3 years?
So we're working towards it, and obviously, that.
But is that a realistic timeline, sir? 3 years.
So I don't want to comment on timeline. Obviously, that's something which if we grow at the rate at which we're growing and some of the acquisitions play out, we are keen on hitting some of those numbers. We will see as early as possible to hit those numbers.
Mr. Ganapathy, a couple of questions. Number one, given the geopolitical situation, are you seeing increased demand for Indian products, especially given the fact that Bangladesh, etc., are facing internal turmoil? Number two, are you worried about tariffs? What is the current tariffs? Do you expect higher tariffs to come through? And number three, how does the weakening rupee actually impact you?
So are we seeing increased business thanks to Bangladesh and other regions? Absolutely. We are seeing a lot of incremental business. So are we anticipating a better business flow on account of tariff? The answer is yes. As long as if there is a tariff across the board on all supplying countries, I don't think it will matter. What matters is the relative tariffing. So if relative to some other countries, India's tariff growth is lower, I think we will still stand to benefit. And we have operations in Africa, which goes duty free. So any tariff, imposed on other regions will certainly support exports from Africa. So that's going to be another plus point from that standpoint. So all of these are auguring well. What is your third question?
Another question which we want to ask you, we just saw, and could you give us some context as well? We understand that there was a resolution to grant ESOPs. However, institutional investors have gone ahead and blocked this. Give us some context. What was the quantum and what exactly has transpired?
No, so ESOP is a way to reward the management team. We have a very large management team which runs various factories, various operations, manages customers. And Gokuldas Exports has pioneered, in our industry at least, offering ESOPs to its key employees. More than 300 employees are covered under the ESOP scheme. And I feel that the board has reaffirmed its faith in the management team, which is a large management team, and wants to keep ESOP as a way to reward its employees to deliver shareholder value creation. The last one, we had some challenges. Shareholders had certain issues with the ESOP construct, and we respect shareholders' value. We needed special resolution approval from shareholders, which meant that 75% of the shareholders approve in favor, and I think we had 63% approve in favor. So we will take the inputs from the key shareholders and appropriately tweak the ESOP related ESOP offer, and then go back to the shareholders. I think as far as the policy is concerned, we are firmly behind it.
Thank you very much for joining in. That's Gokuldas Exports for you.